What's going on, traders? Now in this video I'm going to try to explain to you how to find a high probability setups while trading ranges and how to avoid taking a losing trades, because a lot of traders, they love these big uptrends or these big downtrends because it's fairly easy to find some good pullbacks. But if you master the skill of trading ranges successfully, your trading will improve. So in the first portion of the video I'm going to show you guys how I actually traded a trading range today live, and I recorded it, and you will see what is going through my mind, how am I trading it when I see the trading range live, prices print on the chart. And in the second part of the video I'm going through all the reasons why I took the trade and how to find these high probability setups and what should you be looking for. So if you just want to skip to part 2 and then go back and watch the live part, that is a good option as well. So you guys just saw how I traded the trading range and what was going through my mind as the prices were printing on the chart. But let's now talk about how to find the high probability setups and how to avoid taking losing trades while we are trading trading ranges. So the first thing we need to realize that the trading ranges is formed by a support and by a resistance. And that's the most important thing you need to do. You need to find the current key level. And this was the current high and this is the current low of the pre-market open session as I came in. So what I did, the first thing I'm going to do, I'm going to try to find the key level. I'm going to draw these lines on the chart so it helps me to remember where are the lows and where are the highs. Now, the key with trading ranges is for most part to avoid trading in the middle and just focus on buying low and selling highs, but more importantly, the fading the breakouts, because regardless of what you've been reading on all these forums, on all these books, most breakouts of trading ranges will fail. Just because one breakout out of 10 will eventually work and succeed doesn't mean that is a winning strategy. Most breakouts of these trading ranges will fail, just like it's happening now live. We broke the trading range and we're going back into the trading range. Fading the trading range is the best way to find a high probability setup. But now that we know that we are buying the lows and selling the highs, that's not the only thing we are interested in. I also need to draw the short-term trend lines, because there's a rule in price action that just because trend line broke doesn't mean that the trend is reversing. The traders will wait and will retest the previous high. So in order for me to successfully buy the low or sell the high, what I need to do, I need to wait for previous trend to play out. Just like here, we would see the downtrend working lower, we have a break and a new low. So from this point on, the downtrend played out and it's safe for people to buy the market, and they did. We have an uptrend working low higher, we have a break, first leg to a new high, pull back, second leg to a new high. We don't want to sell anything right here or buy anything, we are in the middle. So we wait for prices to go to the other side, and here would be a good setup to take. So this is pretty easy to identify this trading range. And once again, we have a trend line working lower, we have a break and a new low right here. So this was my first trade that I took. You guys can see the big bearish bar. A lot of traders are afraid to go long to buy this market after they see such a big bearish bar, because it indicates a momentum. All the indicators are showing you that sellers are in the market, but it's the thing with indicators. Indicators are lagging. They always show you only after the fact. So while traders are watching in real time, everybody's thinking that there are sellers jumping and selling the market, so they're afraid. But there's a lot of institutions and a lot of small traders who are just keeping their resting limit orders in here, and they will just buy blindly. It's worth for them to buy blindly, because if you buy blindly 3 times here, all 3 trades would have won, and eventually one trade will fail. So you still put your odds on your favor. And I saw a big bullish reversal bar. So this was my first trade that I took. And we are broken up higher, and we have a first entry short. This was the first attempt by the bears to continue to push market lower. We pushed above the EMA and a second entry short. Now, I did not take this trade because I was still holding my runner. And that's another important thing you need to realize when you're trading ranges. You need to hold the runners. You don't just want to be scalping, because you catch some of the most, some of the biggest trades that you can catch is when you buy the lows or you sell the highs, or when you fade the breakouts. This is the instance that you will catch the biggest runners as ever. So don't just rely on scalping. What you want to do is you want to scalp and scale out with the runner and hope for market, to give you all the profits. And this is a failed second entry short. So this is a high probability setup. Notice how I marked only this one trade in the middle of trading range. Why? Because it is a failed second attempt. That's second entries is a tie down to human psychology. And we pushed above the EMA. EMA was holding prices. The trend line was holding prices. This is what it's called a key entry point. The trend line is key entry point and EMA is key entry point. And key entry point is the point when high probability setups occur. So you always want to find the key entry points. So this is a 21 bar EMA. And here was the little bit trickier thing that happened, because we were supposed to go to the opposite side of the trading range. We were supposed to go to the highs, and we just didn't make it. There is a gap and we instantly sold off. So I was a little bit hesitant to buy here. There's not a good signal bar either way, But since we didn't make it to the highs of trading range, there's something telling you that there are not a lot of buyers still left, because proper trading range, you goes from one side to the other, all over the place. Here there is a gap, so a lot of sellers starting to come into the market. So you just want to be patient. You have a low right here, and once again, first entry short, pull back, second entry short. That's high probability setup. We're not looking to short the market because we would be shorting the support. We are looking for failures, for a little bit weaker traders who want to go short into the support. Unfortunately, this setup, this signal bar is way too big for sticking to our rules. But if we just had the better signal bar, this is a two failed attempts in the previous direction. Once again, we pushed above the EMA and a nice bullish sentiment is now being established. This is what we want to see. And prices were working up higher, we are now inside of this trend line. And we came back to this resistance. We made this bearish bar and we instantly sold off. This happened so quickly. I wonder what this was. You wouldn't have even had a chance to enter this trade. So, and you cannot enter this late. This trade would have already, if you just sold this trade right here, you would have got your scalp. But it happened so quickly that it instantly came back, and now you don't want to enter because your scalp portion is, you know, fulfilled, and you want to wait for another opportunity. But you guys can see even the selling the support still, it still worked, but it is not ideal when you miss the trade and you want to chase it. But we're still inside of this trend line, so I recommend for waiting for break and a new high. And now you guys see we broke the resistance, and most people will tell you to buy the breakout, but you don't want to buy the breakout. You want to sell the breakout. You want to fade the breakout, sell the breakout to the upside. And notice how we are far away from EMA right here, but we are still inside of this trend line. So once we pull back to the EMA, pull back to this key entry point, there was still quite a few buyers left in the market willing to buy. And they just rolled the market up just a little bit, created a double top and a big bearish reversal bar. Now this is telling you something. The people went long on a breakout pullback trade, and all they did is manage to push the double top right here. And as most breakouts will fail, once again, those institutions, the smart traders, they will be looking to sell any breakout because all these people keep their stops right here and they want to leverage all these stops right here. So this was my second trade that I took, a nice bearish bar, a double top right here, and you're still quite away from the EMA. It stalled a little bit, but you guys can see how good of a trap it was because everybody was keeping their buy stop right here. People who went long right here and who went long right here after a failed breakout, they all kept their stop right here, and you guys can see what it did. Look how good of a trap this was. This is how you can recognize the trap. The momentum that's being generated by this trap is really substantial. And we have this trend line working lower, and I was holding my runner at this point on. We have an overshoot, and overshoot of the trend line will lead to a break or possibly straight up reversal. And you have this trend line working, however, you have first leg to a new high, pull back, second leg to a new high. Now you created a new high of this uptrend. So this uptrend is over because we have a new high. We are retesting the resistance. Once again, there's a 3 touches to the resistance and 1 push higher. I tightened my runner and I got stopped out. Unfortunately, I should have kept my runner in place, but I re-entered instantly. Once this is a triple top right here and a 1 push higher, this failed trap and a nice bearish reversal bar, you know that you're probably going to push lower. And once again, my runner got stopped out once again. But just remember, this is the way you trade trading ranges. You want to wait for prices to get to key entry points, to these key levels. And the reason why you don't want to be shorting just so quickly right here, because the same thing that I was talking about here happened right here. We were supposed to go to the other side, but we bounced from the middle. So I just don't want to short this, even though it is bounced off the resistance. There is some sign that there's not many people left selling the market because we were supposed to go down here. So you want to let the bulls get trapped. So you don't want to sell here, you don't want to sell here, and this is a triple attempt. And we finally have a new high. This high is higher than this previous high, new high of this uptrend. So now it is safe to go long. And you have a first entry short, second entry short. We closed below EMA, a big bearish bar. EMA is key entry point, and such a gigantic bar. This is the first break of this channel, so we are expecting a new low of this channel working lower. We're coming off the failed breakout, so there's a high chance we're going to go to the other side. And once again, we have a failed break lower, and they instantly pull back into trading range. So this is how you want to trade the trading ranges. I know it's a little bit scary. I know it's scary to sell the market this high, but that's exactly how the market is designed. Market is counterintuitive. Now, I'm going to say once again, the market is counterintuitive. Forget everything you learn in real life, all your real life experience, because it is tempting to sell the lows and buy the highs, because the market has proven to us that it is doing something. Market has proven to us that it's going higher or it's going lower. But in trading, you want to capitalize on exactly the opposite. Anything that makes common sense, you want to throw it out of the window, because trading doesn't care about your common sense. You need to shift your brain and rewire it, thinking only about what is happening on the market and sticking to the price action rules. You always want to stick to rules of your strategy, and don't be afraid to take these trades, because what you don't want to do, you don't want to miss all these trades and then take one trade and that will be a loser. You need to stick to your edge, stick to your strategy, and take all of these trades, and you will be successful, because there is no denying the price action right here works. And you guys just saw it in my live real-time example. As I was this is really the chart. I'm filming this a few minutes after I'm done with this, so you guys can see exactly how I draw the trend lines and what was going through my mind when I was watching charts prices print on the chart. So if this video was helpful to you guys, I really appreciate it. You made it to this very end, so hit the like button. I really appreciate it, and you can subscribe to the channel if you are interested in learning about day trading. So I'm gonna see you guys in the next one, and remember, just forget about common sense.